One factor that has hampered the development of financial planning as a discipline and as a profession is the fact that there have been very little agreement among advisors as to what exactly financial planning is. Indeed, there are many definitions of financial planning as there are people who believe they are engaged in it. This debate, which continues among financial advisors even now, is not merely an exercise in semantics. The discussion becomes intensely practical when questions are raised about such issues as who shall regulate those advisors engaged in financial planning, who shall set standards for the financial planning profession, and how those advisors should be regulated and compensated. The SEC defines financial planning by outcome. Financial planning can help assess every aspect of your financial life, including saving, investments, insurance, taxes, retirement, and estate planning. The Financial Planning Association, one of financial planning's largest member and advocate groups, defines financial planning as the long term process of wisely managing your finances so they can achieve your goals and dreams. Definitions of financial planning vary across the industry, yet common themes emerge. Financial planning is a process performed by professionals with training and expertise. Financial planners span compensation models. Some are fee based, some paid on the scale of products. Backgrounds. Financial planners span compensation models, backgrounds, and specializations. Universally, financial planning is recognized as a process of identifying financial goals and developing recommendations to address those goals. Financial planners may come in different compensation shapes and fiduciary models, but they are united in a quest to help clients meet their goals. Despite conversations about compensation and business model preferences, financial planning can be defined conceptually as a process that accomplishes both of the following: ascertaining the client's financial goals and objectives, developing a plan for achieving the client's goals and objectives. Financial planning can be personal for a family or corporation. The two guiding principles of ascertaining goals and developing strategy to tackle those goals remain constant. Along the road to helping a client meet goals, a financial planner might engage in a variety of skills and tasks. Those skills and tasks are topics that fall under the umbrella of planning. While they vary from client to client, financial planning topics are generally considered. General principles of financial planning, such as making a balance sheet, cash flow statement, or preparing time value of money equations. Retirement planning, including accumulation or decumulation planning. Estate planning covers building estate plan strategy and helping a client work through their future wishes. Tax planning, planning for efficient, compliant, and wise tax decisions. Investment planning, including asset allocation, risk tolerance and measurement, stocks, bonds, mutual funds, and annuity discussions. Risk management, a broad topic that spans insurances from life to commercial property and everything in between. Education planning, higher education costs continue to soar. Strategies for helping families finance college have been increasingly complicated. Practice professionally. Ethical and responsible financial planning requires understanding and adhering to ethical codes of conduct. Whether a single financial problem is being addressed or a comprehensive financial plan is being developed, the financial planning process has 8 distinct steps, also referred to as domains. Historically, the planning process contained 6 steps. As planning has evolved into a profession, the 6 steps process did not accurately reflect the challenges in communicating recommendations to a client or working in today's advanced legal frameworks. Using 8 domains better captures the sophisticated nature of planning, and those domains are derived from the CFP Board's Job Analysis Survey, completed in 2008. The planning domains are outlined and summarized on the following chart. Advisors who primarily sell financial products generally view the financial planning process as a selling/planning process that has 10 steps. That is, the 8 domains of the financial planning process identified above, preceded by 2 additional steps. 1. Identify the prospect, and 2. Approach the prospect. Financial planning domains. 1. Establishing and defining the client-partner relationship. 2. Gathering information necessary to fulfill the engagement. 3. Analyzing and evaluating the client's current financial status. 4. Developing the recommendations. 5. Communicating the recommendations. 6. Implementing the recommendations. 7. Monitoring the recommendations. 8. Practicing within professional and regulatory standards. Steps in the financial planning process. The 8 financial planning domains. For advisors, this process for helping clients achieve their financial goals can be applied to the full range of client goals on a comprehensive basis. The process can also be applied on a narrower basis to only a subject of those goals, or even to a single financial goal of a client. It is not the range of client goals addressed that determines whether an advisor is engaged in financial planning. Rather, it is the process used by the advisor in addressing client goals that is the determining factor. The following pages present a brief discussion of the 8 domains involved in the financial planning process.